We got to keep it moving here on the morning. Consumers, they're flocking to Footlocker as big discounts boost the company's holiday sales. But Wall Street still doesn't seem to be a big fan of the footwear retailer. For a deeper dive into Footlocker's earnings, we're joined by Janine Stichter, who is the Managing Director and Consumer Retail and Lifestyle Brands Analyst over at BTIG. Great to have you here with us. As we're continuing to keep an eye on Footlocker, we were talking about this earlier today. There's some weak spots in the report here, but ultimately shares up by about 15%. What do you think is the main takeaway that investors are zeroing in on here after the earnings?
Yeah, I think it all needs to kind of be put in context of the broader environment. As you mentioned, these results are still very challenged, and their comps were down 8% in the quarter, but up against a backdrop where I think a lot of analysts and investors were expecting them to have to lower their annual guidance. This is a relatively better result. And I think the important thing to call out here is, whereas for most companies who've reported through the Q3 reporting cycle saw a deceleration from August into September into October, Footlocker actually saw the opposite, where their trends were relatively consistent in August and September, down high single digits, but they actually saw an improvement in October, down mid-single digits, and it sounds like Black Friday was off to a good start for the holidays for them.
Janine, how reliant are they still going to be on promotional activity? And when we look beyond the holiday season, what do you see that promotional activity looking like in 2024?
Yeah, I think that's one thing that makes it a little bit challenging to understand what the underlying fundamentals look like for this business. They're still working through an elevated inventory position. So they were very promotional, especially as you got into October and November, as we got into the holiday season. So that definitely drove some of the improved conversion for them. I do think the promotions will start to improve once we get through the holidays. And that's all kind of relying on the inventory position, which they called out being flat to down slightly to finish the year. And also just what we're seeing in the environment, where inventory is still a bit elevated, but we are seeing it come cleaner and athletic. It's been heavy throughout the whole year, but we're finally starting to get to a point where we're at an equilibrium with the inventory levels in the athletic industry.
We have one of our faithful viewers who chimed in and I think made a very good point in tweeting at us during the show, talking about some of the inventory and what this could potentially spell through for some other earnings, and notably Nike here too. Is there any kind of pull through from what you've seen on the inventory front and the discounting, the promotions that Footlocker has implemented that could impact even a company that's typically reporting later on in the season and where overproduction might have taken place in some instances here?
Yeah, well, I think we've heard it from Nike already that what they're talking about is where they got over inventory last year, they're being much more tighter in their distribution to the market. So I think we'll see them continue to return to a more full price cadence. We heard a bit from that from them when they reported their last quarter. And I think we'll continue to hear that, where they will be reducing the amount of inventory they put out into the market and just being a little bit more judicious in their distribution as they think about where they put their product.
Janine, some of the new partnerships or plans for growth are looking more international. They have a plan to operate in India next year when it comes to the building on the relationship with the NBA. Now, Footlocker is going to be a marketing partner here in the U.S. How big of a catalyst do you see maybe those two partnerships being here for Footlocker when we're talking about this turnaround plan and the transition that's taking place under Mary Dillon?
Yeah, I think the NBA partnership is particularly important. They already have really high brand awareness. Everyone knows Footlocker, but this kind of serves to elevate the brand awareness further. And I think what it does for them is it allows them to go deeper into basketball. And as they think about the strategy for next year and the years beyond, it really hinges on continuing to become the go-to source for the basketball category, which is really their bread and butter. It's their sweet spot. And this kind of further reinforces that relationship. With the India entry, it's interesting. I think it's not particularly meaningful right now, but I think it potentially reflects a broader strategy where they have opportunity to expand internationally. And the important thing here is that it's a license agreement. So it's not capital intensive. They're putting their capital into refreshing their stores in the US, but there's still an opportunity to leverage the brand awareness they have, leverage a growing footwear market internationally without having to put a lot of capital outlay towards it.
Janine, I don't want to admit how much time I spend in Footlocker on a weekly basis, but I got to check out what the kids are wearing and hope to stay on trend. At the end of the day, though, the number of stores that they have, is this a base or a profile of stores on the counts that they have at this point in time that you expect to see dramatically reduced or, if not repositioned, perhaps, into other areas where foot traffic continues to remain strong, considering that many of these stores, like I had grown up going to the mall, were annexed to the mall experience?
Yeah, I think what we'll see is more of a repositioning. They've already done a lot of the heavy lifting on closing their underperforming mall-based stores. We'll see more of that in the coming years, but we'll see that square footage net actually growing because we're seeing it shifting towards off-mall locations where we're seeing more of the traffic. So I think when you think of this story and this company 3 to 5 years out, the plan is to be about 50% off mall, where the traffic is really gravitating towards, and where they can also open larger stores. And the larger stores are important because it allows them to better showcase some of the newer brands they're bringing in and allows them to better showcase the apparel. They can really become a one-stop shop for footwear, for apparel, for the whole family, something that's harder to do in a smaller mall-based box.
All right, Footlocker shares up just about 17% right now in early trading. Janine Stichter, great to have you here, Managing Director and Consumer Retail and Lifestyle Brands Analyst with BTIG. Thanks, Janine.
Thank you.